Welcome to Power Charting. I am your host, Bruce Fraser. Today, gold shines. Let's have a real close look at gold. Let's look at the very biggest picture and chunk size down into ever smaller time frames and have a look and see what's been going on with gold because it's becoming very interesting at this time. And with that, uh, very happy that you're here. I was not in power charting. I was not here last week, but I really was because I met with Joe Rabel and over at Stock Talk, his great program, we did a swing trading workshop combining his great tools analysis, his processes, and combining them with point and figure analysis on a swing trading basis. We had a blast. A lot of good comments. Thank you very much, everyone, for your feedback. And we will do more of these in the future, but go check this out, last week's Stock Talk episode. And that with that, also for great Wyckoff content, go to Wyckoff Analytics, wyckoffanalytics.com. Very soon we will be having a free Wyckoff market discussion episode that you'll be able to attend. I will tell you here in advance when that will be available. And with that, we're going to have a look at accumulation structures in gold. So I just want to show you these two accumulation schematics so that you can study them, look at them. Go back to the July 2015 blog and read about them. And we're going to spend some time on this today. Also, we're going to talk about reaccumulation in a very large time frame. Reaccumulation can happen in all time frames. It's very fractal. We know the markets are fractal. Well, wait till you see the gold chart. Now, let's start with a view of the sectors. And I really want to point out just a couple of things because I want to focus on materials and a little bit on energy, I suppose. But note that most of these sectors on a relative strength basis are underperforming. They're starting to make lower highs. Look at technology. Had an upthrusting action, is already turned back below the peak of early February. Now, one of the bright spots has been the industrials. Look at the higher highs throughout this recent advance from January. Also, look at materials because it's definitely gold miners, other forms of mining have been performing better and better. And you can see here that the relative strength line is starting to make higher highs. Look at the higher high. This is a higher recovery high above December. This is pretty strong. Well, we're going to have a deeper look into that here in a minute. Energy is interesting because it appears to maybe be making a base of sorts over here. And you can see higher highs above the early January peaks. This could be an accumulation style swing structure. Now, note again, staples, relative strength is diminishing, relative strength in healthcare, relative strength in utilities, financials, and also real estate. Let's hope that they can get better, but there's only a few shining spots right now among the different sectors. Now, with that in mind, let's go to the great tool, the index members tool. I want you to do this as a homework assignment. What I've done here is I've gone to the materials sector. You can see all these sectors and you can drill into them, all the ones we just looked at, and you can drill into them. I'm going to concentrate on materials right now. And what I like to do is to sort by scooter. So now they're sorted highest to lowest. And then I like to sort by industry. Now we have all the industries in order in the materials sector, sorted by industry and by scooter strength. And what I would suggest is just as a sort of an assignment for you to think about, here's general mining and sorted again by scooter. Not every stock has a scooter rank. And gold miners, you can see they are ranked by scooter also. So you can see strongest to weakest in the gold miners. And then you will find there's a lot of gold miners. And then you will find in non-ferrous metals, which is where you're going to find silver, uranium, and so on. Very interesting group is to go to non-ferrous metals, sorted by Scooter, look at where the leadership is, and also the laggards. There's also copper in this group. Cameco is an important uranium stock. And become familiar with these stocks because this is really the topic we're going to talk about today. And so moving on, let me talk a minute about the 6 stages of business activity. And I'm just going to go ahead and put these animations up. But this is my dear friend, Martin Pring, developed this a number of years ago. And the 6 stages are the 6 stages of the business cycle. And they, in order of the asset classes that tend to perform well as you go through these 6 stages. Now, I'm not going to spend the time defining these stages here, but certainly going to Martin's great blog posts, you can learn much more about this. But there tends to be a sequence of leading and lagging events. So note that you have a high in TLT, which is the high for bond prices, the low for yields. In this case, this was in 2020. And this high was then followed by a high in the stock market, followed by a high in commodity prices. This is the CRB Index. This is the S&P 500. So now we look at lows. So we have a low back here in 2018. This is the low for the TLT, which is a high in yields. The low for the stock market either came here or here. I'll let you decide. And then the low in commodities comes third. So this is the sequence of events that occurs: 1, 2, 3, 1, 2, 3. And so now just the point I want to make is that bonds made their low in October of last year. Stocks made their low at the same time in October of last year. And then commodities made their low around the early December period. And you can see here the sequence taking place. Well, now they're turned up. Bonds have really been, other than the initial launch, have been relatively quiet really since December and have not made any ground, where stocks have been on a tear in October through the end of February. Now we're starting to see something interesting, which is commodity prices, CRB, which we just talked about with the materials sector. And also we will talk about specifically gold in this area here in a minute. But what I want to point out is that CRB is now above its 12-month, 52-week moving average. So now, and here you can see treasuries are really just sort of hovering here. They haven't been able to really have a meaningful rally while stocks have. And now, what if, and this is a big if, but I'm asking the question, what if CRB starts to mark up in 2024? I think the effect of that could be that you start to see these material stocks performing better. Also, the Fed may be, inhibited from lowering interest rates too many times in 2024 if they're seeing commodity prices, oil prices, gasoline going up, because this is the raw material of inflation. Now, it's a big if at this point. We're not predicting it. We're just saying this could happen. And we're starting to see the evidence of higher prices with the CRB now above its 52-week moving average. And this puts us in effectively stage 3 of the business cycle, which is right here. And stage 3 is when you have stocks here in red. Now, this is the economy here, and then you have inflation here. But this is the time when you have bonds rallying, stocks rallying, and inflation rallying. And stage 4 is when the bond market peaks out. We're not saying we're at stage 4 yet. We're in 3. And 3, by the way, is one of the best stages to invest in the business cycle, because all the asset classes are in confirmed uptrends. And so this is a great time to be an investor. Okay, moving on. A blog that I wrote back in 2018 in August. I want you to go check it out in the archives. This was prospecting for a low in gold. And I'm just going to zoom in here. You can read the article as you have time. But this was monthly bars of the gold continuous futures contract, which I had back to late 2004. And at the time, I said, asked the question, is this an important low, plumbing for a low in gold prices on this monthly bar right here, where it went down, touched support, and it closed the month, or was about to close the month, at the high of the range inside of this accumulation structure, asking the question, could we rally up from this level? And so please read that at the time. And I've written some other gold blogs since then, but this was around the area of $1,216 for gold. And you can see the analysis, classic Wyckoff analysis. And so again, here is this article. It's historical in its nature. Here it is. Here's what we just looked at. This is the August bar, the August 18th blog post at the time thereof, and you can see a rally started thereafter. The downtrend was pretty well defined. It pulled back here into a little bit of a backup action and then broke out of this area, and look at the huge increase in volume. Really tremendous volume advance. And this is what we look for at the conclusion of accumulation. Accumulation should see good volume as it propels its way above key resistance levels. Now notice that this looks like a big cyclic accumulation, a la the schematics we looked at a few minutes ago. But here you can see a selling climax, automatic rally, secondary test. Then we had a shakeout in phase B, and then an LPS, last point of support. These are tests. They each came at a higher level around the area of the support defined by the selling climax. And then this upward stride, which went right to this resistance level and spent very little time here, jumped out, had a very shallow backup that's super bullish, and then note the volume coming in again as it's propelling its way up from this accumulation structure. Very impressive. But then in 2020, we hit the resistance zone defined by the high all the way back in 2011. Tell me that markets are not fractal in their nature. Look at this climax, huge, very long-term reaction. This is a huge structure. It's quite large. Now, this yellow area, which is where we're going to focus our attention in the next few minutes, is what appears to be a backup type action. So we have a sign of strength rally, which then pauses and pulls back. This is a reaccumulation style structure. Just showed you the schematic for that. So here we see a reaccumulation of this area right here, quite large in its own right, 2020 to 2024. But note how it stays in this tight high range at the area of the buying climax and stalls here. And we've said in the past, this is actually a bullish structure. People have been quite frustrated with gold through this period because it's spent a very long time just trading in this area. But when you put it in the context of this very large accumulation style structure, this looks like it's just a very normal backup type action, high and tight in range. Volume is drying up throughout. And then it has an attempt to rally up out of this area, one shallow pullback. This is a change of character here because you can see volume does not appreciably expand. It stays at the area of this very important resistance defined by the buying climax. and it stalls here, and now we're starting to see it coming up and out of this zone. So let's go in, zoom into this area as defined by this yellow shaded box and have a closer look. These notes, by the way, are notes that were put on this chart way back when it was originally, or early in its construction, when we were analyzing this whole area back here. So just check those notes out, but keep in mind that the context is the reaction off the peak and this zone down here. They don't apply to what's going on here. Okay, so here's our first chart. This is gold continuous contract. This note is 2023, this lower accumulation style structure. And this is the backup where this resistance area is adhered to by this pullback. So really nice sign of strength rally, pulls back, stalls in here, makes a new count. So 2 counts, and look, these 2 counts confirm each other. So this is what we call a stepping stone reconfirming count. Now let's go back and look at this area. So you can see all we're looking at here is this zone right here. We're not even looking at this larger structure. And we are just studying this slight pullback on a backup into this support area, which it's already starting to push up and out of this area potentially. It's still uncertain. As you can see, we're at around 2150. But if these 2 counts confirm each other, note, and this is a timing trick of point and figure, is that when this reconfirming count matches this lower count, this often is the point at which the new uptrend is ready to start and take off. And that appears to be what's going on, because note this catapult wall. This is beautiful. It goes from 2010 to 2150 without as much as a correction in this 3-box reversal chart. And this is 3-box reversal 10-point scale. And so this is a really fine advance, and look at the volume that came in on that catapult wall. Now, moving on, here is a larger time period. Now, I'm looking at 3-box reversal, but I'm looking at 25-point scaling. 25-point scaling is going to give us a bigger structure. So this is a way to see more data and count it. This count here, let's again go back to here. This encompasses this zone across here. So see, now we're counting this much bigger area. And so we are going to be conservative. So we're not counting the whole area. And I know some of you are saying, well, can't you count from here all the way to here? Well, yes, you can. Let's take the more conservative count initially, keeping in mind this bigger count, marking it in pencil on our charts. And then here you can see this pullback produces a very strong advance, 2 new highs, where it pulls back twice, pulls back into support, and now it's going back up to the highs again. So let's count to this strength here with this pullback to 1825 and count to this low, because this low in this rally set the initial range for this accumulation structure. So this looks to me like a good conservative count to take. 25 columns across times 3 times 25-point scaling gives us 1,875 points a count. And so we add that to the low at 1625. We add it to the count line at 1825. It gives us a count 3,500, 3,700. It's pretty substantially higher from where we are at this time. So that's really interesting. Now, the caveat always is with these situations is that you want to see this just continue to rally and pause, and clear the overhead resistance permanently. And right now we are just on the edge of that. And so being on the edge, it's still uncertain that we couldn't have it come back into the trading range area. And so we need to be very, very focused on this, but also keep in mind, look at the immense volume that came off of the test of this low right here, action test, and a beautiful catapult type wall, very high volume. And then look, this continues the advance up to the resistance zone at 2075 on additionally high volume. Very impressive. More good volume here. So you can see these volume surges are quite good, which shows demand is present as prices push up to ever higher levels. And so also note that on the pullbacks here and here, that the volume is quite low. Now, this is I love to look at volume on point and figure. I think this is very telling what we have here. And it's a very good sign if we can, again, stay here and then start to move away. Okay, last chart we have here today is the gold continuous contract daily bar chart. So again, we are only looking at the period here, 23, 24, but here is a beautiful structure on a Wyckoff basis. And so we have a buying climax, automatic reaction here, range bound condition. We have resistance at the buying climax, support at the automatic reaction, and then a series of secondary tests with a shakeout in phase B here. And then we have a minor sign of strength above this peak, which has to have a pullback into a last point of support, very common, and then a very important rally with good volume up into the resistance zone where another reaccumulation, or in this case, a backup type action takes place. Very sharp reaction here. This has a bit of a buying climax quality, but it's a major sign of strength. Automatic reaction. Now we're in a hinge. In this hinge, lower highs, higher lows, and it just keeps winding up, which is demonstration of the absorption being nearly complete. And the confirmation of this is just the sheer leaping advance that comes after a hinge with diminishing volume on the pullbacks, and then a very sharp advance, which shows that stock, or in this case, gold, is in strong hands. And note the very high volume here on the initial launch. And so this is just a beautiful chart. Check it out. And also you will see here, I put this yellow circle here so that you could see that the volume off this shakeout in phase B is a good, very good volume advance back into the trading range, which really confirms that this was in fact a shakeout. Last thing is relative strength is after being in a long downtrend through this area here, has jumped above its moving average. Now this is obviously shorter term basis, 21-day moving average, but what we want to see from relative strength now, especially against the S&P, higher highs and higher lows. So we're starting to see that effect. And if this comes with these higher prices out of this area, it's constructive. So with that, that's the end of our show. Thank you so much for being here, and we will see you next time on Power Charting.